had it asked by about two or three of our people on today, and it's actually about life insurance. And the question in essence was, is life assurance essential when you're getting buy-to-let mortgages? Well, there's a couple of answers to this. One is that back in the old days, mortgage lenders used to make it mandatory to take out life insurance. And as we've all seen, that disappeared a long time ago. So the onus is now on you as the applicant as to whether you think you want life insurance or not. You will see on a lot of mortgage offers that they refer to life insurance and they'll quote even figures, but it's not mandatory. So that's the first comment I want to make. However, here's the thing. If you're on your property journey, and I guess most people on this call right now are, if you've already got to your property goal, I'd be surprised if you're on this call and still trying to learn about finance. So I'm going to assume that you haven't reached that property goal yet. You're either starting like Ben, getting his first property, or you're somewhere on your journey. And you've got this property goal of achieving, I'm going to say, £100,000 a year of passive income by a certain time scale. And you know you need 10, 20, 30 properties to get there. But you're only at a certain part of that journey through. And then all of a sudden, something out of left field happens that completely derails that plan. Now, that might mean you literally get run over by a bus and you're no longer on the planet. And in other words, then what happens to that property plan? It's in tatters, or there's some serious medical issue, a critical illness, a serious illness that just means you cannot carry on with your property plan. Either way, it's completely compromised. You're no longer going to hit those property goals, because once you get to your property goals and you've got that 100 grand a year, I don't see the need for insurance. But whilst you're on your journey, you've got to protect the journey. That's my opinion. So from my view is you need some form of life insurance and protection for that journey, whether is it 5 years, is it 10 years? Because if something happens, the whole point of life insurance is that you never want to use it. No one wants to use that product that they're buying, which is really unusual. But it's there for if something really goes badly wrong. And what that does is it accelerates that you to your goal, because if then there's a lump sum comes out, it can clear the debts, and that means your loved ones, your beneficiaries, or indeed you, if you're still here but you've actually got a medical condition or a serious illness, you've now got perhaps a portfolio that's completely debt free, maybe to either pass on to your beneficiaries or for you, so that passive income instantly goes from where it is currently significantly higher to meet your changing needs. So if you think that resonates with you, and by the way, it can be put into a trust. We do that here where we put it into a trust. It's got an envelope that means it's completely tax free. It avoids any tax whatsoever. It does not form part of your estate. It's another sort of question. I don't want to get into too much detail, but it's very simple if you get advised life insurance. So if you want to know a little bit more about that, you want to know how you can mitigate those particular risks, how life insurance can be tax-free if you don't think it is right now, then just before we finish, just put into the chat life insurance introduction, and we've got a lady in our office called Yvonne, who will be delighted to have a no obligation conversation with you and just give you some facts and figures and information so you can make an informed decision on that point.